very long, not trying to sell the same day or make quick money. They have money, they have a solid source of income, but for the sake of building a portfolio, for the sake of generational wealth, for the sake of um, preparing for their retirement, they just buy some stocks, some commodities, some instrument to kind of like keep their money, also to hedge their money against inflation. As we all know, how inflation is like how inflation can eat into our money very quickly. So because with that being said, those people just buy. They don't, some of them don't kind of like they don't even look at anything. They're just like, okay, oh, Tesla is good. They buy Tesla, 1 million worth of Tesla and leave it there. Some others would buy Nike, keep it there without doing any technical analysis, without following fundamental. That kind of is good because we know, especially when you're doing blue chips are stocks that are not going anywhere, no matter what happens. Like the top five, we have Google, we have Tesla, we have Apple, we have Netflix, we have Amazon, all those ones. We know no matter what happens, yeah, they can come down like 20%, 30%, which is okay because when stuff like that happens, savage investor know it's time to buy. So they buy because we know they're not going anywhere. At some point, they'll come back to where they were, or perhaps go higher. So people, long-term investor kind of like that's what they do. They don't need to look at the chart or anything. The only thing they want to know is that, oh, Tesla is going down. They know that there's an opportunity to buy, they buy. And when Tesla is going up, some of them don't sell. So this class is going to differentiate us from those people. So we can be a long-term investor, but we'll be a long-term investor with the idea of what to look for and understand how the market moves. So we know when to buy, when to sell, when to increase our position size. Because doing that will help you a lot. Example of what I'm trying to say is, okay, let's say you're just a regular person without any experience or like any knowledge of how the market works. But you just know that, okay, you know what, Tesla is good. If I buy Tesla, at some point it's gonna go up and you buy. There's a probability that you will make money, lose money, make money, lose money, make money, lose money. And the money that what you're supposed to realize as profit in 1 year will probably be break even at the end of 1 year. But if you have this knowledge that we're going to be sharing in this class today, within a month, you know if it's okay to buy, sell some, buy again, sell some, buy again. And at the end of 1 year, you will see what you have, what you would have accumulated in terms of profit compared to someone that just going by ESC, like, oh, Tesla is going down, buying and selling. So I'm going to make it so simple, make this class so simple that if you choose to be an investor, you don't need to, like, you don't need that much stuff. You just need basic fundamental aspect of the market and a basic aspect of the technical analysis. So you can put the two together and kind of like, invest in a more profitable way. So we have different type of market participant. We have retail traders, which are people like you and I. So we just want to come in and make some money that kind of like, help us kind of like, maybe as an extra source of income in addition to what we're making from our 9 to 5 or from our other businesses. Or we trying to make it like, we have full-time traders. All they do is we wake up in the morning, open their laptop, take trade here and there, and they're able to fund their luxury lifestyle from the money they make from the market daily. They are retail traders as well. So either you are a scalper, you are uh, an intraday trader. A scalper is somebody that enter the trade and try and get out within like 10 to 20 minutes, 10 to 30 minutes, maximum an hour. They enter a trade, they buy and sell within that 1 hour. They already know if they make money or they lose money. And we have intraday trader, which are people that they buy. Let's have buy the market open at 9:30. I buy, I can monitor it, manage it from 9:30 to like 4:30 before the market closes and sell, make my money. That's intraday. And then we have swing traders, which are people that buy. They can buy in the morning and probably hold it for a day, 1 week, maybe 2 weeks, or even like up to like a month. Those are swing traders. And then we have investors that people that just buy, okay, Tesla is doing good. Elon Musk is a good guy. Like the guy is being has influence on the economy and stuff like that. So I think it won't be a bad idea to put some of my money into what he's doing. So they put it there. Those are investors. And then we have institutions. Institutions are the big boys that are really, really kind of like, whatever their position size can like have impact on the market. So these people, they buy once they buy, they place one order, and that one order can change the direction of the market. It can make it go down, can make it go up. Those are institutions like people like hedge funds and all these big boys in Wall Street that are like, okay, they are professionals that trade other people's money, they trade billionaires' money. And we have market makers, they are kind of like similar, they're almost the same as institutional trader. They they are the decision maker of the market, they decide how the market will go, the direction the market will go. So we have to have an idea of all these things so we know that, okay, you know what, the market is beyond fundamental analysis and just technical analysis. So knowing all that is going to help a lot. And other things that we will have to look into is few things, which I'll actually have to show us this for us to really understand it. Because if you are looking to trade the market, you can trade it with your own money, but for you to be profitable, let's say you're trying to make 1 million from the market, how much of your own money do you think you need to make 1 million? Based on the time frame that you are looking to make this million. Sorry, give me 1 second.
Mr. Dio, step aside. For people that are just joining us, this training is put together by ACC Impact House. We are located in Pennsylvania, Washington, PA. Please, if you have any questions about this training or any other thing that will be coming up next week, just you can drop them in the chat or connect with us on social media or directly in this chat room right now. I believe today is going to be a big day for us. And next week is also scheduled to be a bigger one because next week we're going to be taking care of the real estate part of investing, which is a big cake for this season. Some of us, we have our money in the bank account that we are getting some small percentage. But if you understand how we can leverage this particular economy to create a life for ourselves, for our family, and to build a future of financial freedom, it will make sense, right? So next week we're going to be looking into real estate investing, and that is going to be in person as the weather permits, and we will also be online for those people who are distant. So if you are local to Washington, PA, we want to encourage you to come in because there will be some resources that we will share in-house that we cannot share online. So we encourage you, if you can come in person, that would be great. But if you are far away, like you're in New Jersey, California, Canada, I see some people from Canada here, you will be able to join online and follow us. And you can follow up with your questions after the training. Thank you.
Yeah, I'm so sorry for that. I'm so sorry. I really apologize for that. So can we hear me?
Yeah, we can hear you, sir.
Okay, thank
Can
you.
hear you.
Okay, so back to the essential terminology. So there's something called bid, ask, spread, volume, volatility, leverage, and margin. So I think at this point it will be more beneficial to kind of like, delve into the practical aspect of this. So I'm going to be taking us through some website that we need to kind of like, have an idea of or know how they work in order for us to really benefit from the money markets. So a few of the websites that we're going to be looking at today are, so the first one is yeah, like I said, if you are an investor or you are even a day trader, you have to know what is going on in the market, which is called the fundamental. Every day, there is always a fundamental. A fundamental is the news. So let's say our President Donald Trump says something. We all know that it's going to impact the direction or the movement of the market. So for all traders, what we do, first thing we do every morning before we even look at the chart is we go to one of the financial website, the
Yeah,
economy.
sorry, but it looks like the screen is freezing.
Oh, can you see me?
We can see you, but
But you
the
can't see my
slide
screen.
is not really, yeah, it's hanging.
Oh,
So maybe you just want to stop and restart
okay.
the
Let
slide
me stop
showing.
here. Then. Okay. Can you see anything now?
Now it's good.
What can you see?
The German CPI, Europe,
Okay, great. Yeah, so that's what I want us to see. This is called the investing.com. So this is the website we go first thing in the morning to see what is coming out. As we all know, today is Saturday. So once you go to the website, you come to economic calendar. When you click on economic calendar, it's going to give you the day of the week. So today is Saturday. Literally, obviously, there's nothing going on because it's a weekend. But I'm going to go back to yesterday so we can see. And the good thing about this website is it's worldwide. It covers information from all over the world. So whatever you want to invest in, it's going to say, like, give you the information here. If you are a stock investor, you have information about stocks. If you are a crypto investor, we all know that the information about most of the information about stock, especially from the US, will also impact the crypto market. And if you are currency investor, like, Euro USD, like, you are into Forex, it's even more useful for Forex traders because, like, you deal with different country currency. So this will kind of like, give you more information about it. But because we're in US, we're only going to we'll be focusing more on the United States news. So as we can see right here, you see where it says US. So if you look to the right, this area, impression, you see the star. So if it's two, it's not going to be that impactful. It's just going to be like something minor that might probably impact the market a little bit, but not something serious. And if it's three stars, that means it's going to kind of like, it's going to have a strong impact on the market. Like 2 days ago, we had CPI. CPI is the information about inflation and stuff like that, which we all know that impact the market a lot. So time like that, uh, a time that investors or traders look forward to so they can kind of take advantage of the volatility in the market to make quick money. And also another thing you can look at here is holidays, earnings, dividend. So if you are a long-term investor, like you're buying Apple, or as a matter of fact, when we say long-term, you are not limited to all these big five. There are other big companies that are dividend giving companies. Like, you buy their stocks at the end of the year or some at the end of the month, each month they give a dividend. So if you are a long-term investor, as you're looking at the company, how the company is doing, you also want to look at what they give in dividend. As we all know, dividend is based on their profit at the end of the year, and then they can like take some of the profit and share with their investors. So that's that about this website. So the main website, okay, like I want to be a stock investor. How do I know the stocks to invest in? So the website I want to go to is called Finviz, Finviz. So when you click on Finviz, this is what you're gonna see. Can we assist? Can we see my screen?
yes,
Okay.
yes,
So we see Finviz. So from Finviz, this is what you see. If you look at where I'm hovering on right now, you see this how the market is doing. This is how the stock market is doing in general. You see the red, green, red, green. So red means that the company stock is down. Green means the company stock is up, is doing well. And another good thing is you can see the percentage. So the percentage at the bottom of each comp stock is how the stock is been doing lately, like how they've increased or how they've decreased in price. So as you can see, AVGO has gone up 2.53%. So this will literally give you an idea of, okay, what to do. Like I said earlier on, if you are dealing with the big ones like Tesla, Amazon, Google, Meta, Apple, when you look at this will give you an idea. Okay, if Tesla goes down 20%, what would you do? When Tesla, you have Tesla stock, you bought it when it was at the social amount, but now it came down to 20%. It came down 20%. What do you do? Most people will sell because like, oh, my money is going. I don't want it to go lose the old money. So let me just take whatever I have left, which is not the way to kind of like, invest, especially in the stock market. Because if you have a position, especially if it's a blue chips, like I said earlier on, we have blue chips, we have penny stocks. That's why we don't want to deal with penny stocks because penny stocks are very volatile. They're very risky. The good thing about penny stock is they can give you a lot of money and they can make you lose all your money within a short period of time. So you have to structure your portfolio in a way that, because you can't do away with penny stocks, sincerely. Like I said, I'm a firm believer of make quick money. But at the same time, I'm also a firm believer of risk management. So if you are going to trade at a high risk level, you have to be on top of your risk management game. What do I mean by that? Let's say you have a $10,000 to invest, or let's say you have $1,000 to invest. And you know that if you are going to buy Amazon with that 1,000, how long will it take for it to double? What's the current price of Amazon? Whatever current price of Amazon is, it has to double before I can double my $1,000. So how long will that take? That's going to take a long time. But instead of spending that much time to double your capital, why can't you just diversify? So you have to structure your portfolio in a way that you have blue chips, which is low risk investment like Apple, Tesla, Amazon, Microsoft, Nvidia, and stuff like that. And then you have medium risk. That is not that risky, but still risky. Yeah, they can go down very fast, but probably not going to go to zero. The probability of them going to zero is slimmer than the penny stocks. So you have a portion of your portfolio in those ones too. And the good thing about them is they move faster than the blue chips. Before Tesla will move 100%, this medium risk would have moved maybe 400%, 500%. Then you have another portion, which is a smaller portion of your portfolio in penny stocks. Penny stocks are stocks that are below $5. Anything from any from cents to $5 are considered penny stocks. So you put some money into those ones too. Like I said earlier, those ones they can move very fast. You can just you can put $200 and wake up to $50,000. You can put $200 and wake up to $10,000. And also you can put $200 and before you even enter this thing, you can make $0 in your account. But when you're dealing with stuff like that, you want to risk the money that you are willing to lose. Like if you lose the money, it won't hurt you in any way. You won't even feel bad about it. And the reason you won't feel bad is not because you don't value the money, but because you already know what you are into and you know if it goes your way, what the returns will look like. So it's a game of probability, but in a very calculated way. So you know that, okay, let's say I have $200. If I put my $200, I split it between five penny stocks. Out of that five penny stocks, if four goes to zero and one goes up my way, I know that that one that goes up will turn my $50 that I put into that can turn into $20,000. It can turn into $10,000. So the other money that I lose, which is 150 that I lose on the other three, 2,000, let's even say small number. So $2,000 minus 150. Whatever we have left is profit. So that's how you deal with all this high risk penny stock stuff. So this platform is where you can see everything you want in terms of the type of stocks to trade. But this right side of the screen that I'm opening on, it's a very important part of this website that we always need to focus on. Be it an investor, be it a day trader, be it a swing trader, you always want to look at this section of this website to see what is going on so you know where the direction the market is going, also to make your own solid decision on what to invest in. So now if we now come back to the top side of this website, you see where we have home, news, and screener. We click on screener, and this is where we filter to see So before we go to the filter, if you come here, this will show you how the market is doing in movement wise. Will show you volume. So volume is very, very important, especially if you are an intraday trader. You're looking to buy and sell the same day. You want to look at volume. And the reason for volume is you don't want to buy something that you won't be able to sell back. And volume is what will determine if you'll be able to buy and if you will be able to sell. Because if there's no volume, let's look at this for instance. ANPA is 120,910 volume. So if I'm to buy this now, and I bought like 200,000 worth of it, and it goes up to the area that I want it to go. So and I'm ready to sell. But the only amount of people, only amount of the only volume in the market, the amount of volume in the market is 120,000. And I'm holding over 200,000 and I want to sell. So how would I be able to sell my 200,000 shares if there's only 120,000 asking bid in the market or ask in the market? But if I'm here at the top side, which is THH, that has 29,600,000 and something, if I have 1 million, 2 million, I can sell very fast. And this volume shows that there are buyers and sellers in the market. So this instrument is being is an active instrument that people are buying and selling. So if you are a day trader or a scalper, this is very, very important for you. So this is where you screen the stocks to know what you wanna trade for the day or what you are looking to invest in for a very long time. So what will really help us to kind of take full advantage of this website is the filter. This area here, if we apply the filter correctly to kind of so if you're looking for something like, let's say you're an investor now, you're looking for something that is high yield, that gives high yield dividend, just come here. You can select what are you looking for. If you're looking for, let's say 7% every month, every year, 9% every year, 10% every year. They even have a very high, greater than 10%, high, greater than 5%, positive, like 0%. They don't give any dividend. Let's say you're looking for very high. You say, okay, we're looking for over 10%. You see that it changes like right away. Give us the stock that have high yield dividend. They give like 10%. So we have MVO, Icon, APX, and all this stuff. They give 10% of this thing. And they're doing well as well, as we can see. PE, these are the difference between the difference in their price. Um how they've been doing. If it's up, you will see like it will be negative. If it's down, it will be positive. If it's up, it will be positive. If it's down, it's negative. And this is changes in percentage. So from the last market open, it went down like 20.72%. As we can see, now we can tell why they are giving high dividend. And you remember, they said they give 10% dividend doesn't mean that you get 10% dividend at the end of the year. You get dividend. That's what they'll give, but will be based on their profits. So if they're not profitable, you know that you're not getting anything. So we're not just going to go by dividend alone, but want to go by the overall performance of the company. First, we want to learn about the company. What is the company into? How are they doing? So to get information about this particular company, let's say MVO, now that will take us to the next website, which is going to be Yahoo. So if we go to yahoo.com, go to yahoo.com and come here in the search area and just type MVO search. It says the company, MVO Oil Trust. Here is where you will see pretty much everything that you need to know about the company. So you use Finviz to pick the stock. You use yahoo.com to do some research about the company. So as we can see down here, they have all the information. Previous close, which was yesterday, closed as $2.08. It opened at zero, $2, 0.2, which means yesterday was a good time for them because the market closed in profit. So we look at the volume, overall volume from yesterday was 691,273 cents. 273 volume. So which means, yeah, it's not really, it wasn't really traded by that much people. It's only like few people that are trading it. So if you are going to trade something like this, depending on your the type of trader that you are, if you are a day trader, scalper and trader, you know that, okay, I have to be careful with my position size. So I don't want to open a position that will be higher than the volume of the volume in the market. You don't want to be the market maker. Because if you I'm coming in now to buy 5 million shares, so I'm the market maker. So other people will just hide behind me to make money off my own decision. So you want to trade within the volume of under the volume of the market. So this one I say 690 something. Normally, me personally, I won't trade this. I don't want to trade anything that is below a million in volume, a million, 2 million in volume. So this is below a million. I won't trade it. But if I look at it, so it now depends on what you are doing. We have different type of trader too. So if you are an option trader, which is something like, that it's a course on its own, but I'm just going to mention it briefly because stuff like this are good for auction. So if you combine technical and fundamental, look at their balance sheet and stuff like that, you see that, okay, eventually down the line, there's something like, something good may come out of this company, then I can buy an option call or put that, okay, you know what, I'm going to buy an option and hold it for a year. And within that year, based on my research, the market would have gone this far and I can leverage that. And that will give you a lot of money. So that's what most like option traders do. They call it leap option, LEAP, to just buy to hold for a long time. And with leap option, if the market have anything coming, or like you go based on their financials, you see how they've been doing for the past year. So these are financials since 2021. At least you get information from 2021 up to date. So this was the last one that was released. It was released on December. See if the market is making money. I mean, if the company is making money. So if you are looking to do a leap option on this, like, okay, I want to buy it and hold it for a year. Just it's basic data. Okay, 12,078,800 and something. 12 billion 78,886,000 they made in 2021. In 2022, they did much better. 2023, they did lower than what they did in 2022. 2024, they did better, a little better than what they did in this thing. So which is okay. So now before I do anything, I want to wait for their 2025 statement. Revenue, expense, and you don't just go by revenue, so you have to look at the operating expense and all those stuff. That's fundamental. Like, if you're looking to do investing is kind of like, take time, and also you need some money to do investing. So I think I'm already spending too much time on investing, but that's that about that. If you want to go the investing route, that's how to go to Finviz to pick your stock, go to Yahoo to look at how the company is doing. Then you can, like, make your decision based off those information. And remember, what we've talked about so far is just fundamental. And like I said, for you to be an educated investor, you have to combine both fundamental and technical. And this is one of the stuff that you can use for stocks. This does not apply to crypto. This is just for stocks. So now, if we are to go to crypto from here, same thing applies to crypto. We have blue chips crypto like Bitcoin. We have blue chips crypto like Ethereum. We have Solana. Those are cheap crypto that utility coin. We have different type of coin. We have utility and we have meme coins. So utility coin are coin that they're using for something. Ethereum, we know that we use it for money transfer. Bitcoin is like the gold of crypto. And that's what determines the direction of the market. The good thing about crypto is you can trade at any time. It's open 24 hours of the day, which is something they're proposing on for stock market too. At some point, stock market will be open for 24 hours, but for now, it's only open Monday to Friday, 9:30 to 4:30 p.m. And if you trade currency like Forex, it's open Monday through Friday. And it has longer hour than the stock market because we have different sessions. So we have Asian session, we have London session, and we have New York session. But that's another topic on its own. So now we're gonna go from here to crypto. And now from here going forward, I want to focus on something that we can do for like, that will give us money faster than, investing and stuff like that. So this is the fundamental. I'm trying to balance it. I don't want to kind of like, focus on one side because we have people that are interested in crypto. We have people that are interested in stocks. We have people that are interested in commodity like gold, oil. And we have people that are interested in Forex. But the good thing about the information, if you really understand how fundamental and technical analysis works, it doesn't even matter what you're interested in. You can trade anything that you want at any time. Today's weekend now, I know that okay, the market, Forex market is not open on weekend. Stock market is not open on weekend. When I wake up, like today now, I just go on my phone and I see what Bitcoin is doing. I'm like, okay, this is a trade opportunity. I took a trade opportunity on Bitcoin on Saturday. Same thing, crypto will be open on Sunday. So you can literally make your plan, what you trade during the week and what you trade during the weekend. So that way you make money regardless of the day of the week. So let's look at some crypto. As we all know that crypto is like, we all hear about it. Oh, you hear about Trump coin, and people trying to jump into Trump coin. And before they know it, they buy when others are already selling. So what I'm going to be showing us is what to look for and how to know when to join the market. So the first thing we want to do if you are going to focus on crypto, like I said, it's going to be similar to what we talked about for stocks. Because stocks, we need FinFix to pick, we need Yahoo Finance to see how the market is doing, how the company is doing. And now for crypto, we use crypto bubbles. So if we go to cryptobubbles.com, actually it's cryptobubbles.net, I'm sorry. See all these bubbles? This is how the crypto market is doing. You see that it's similar to what we saw on FinFix. So the green one is the crypto that are doing well currently and the percentage out there, they've been doing. But one thing we need to understand about this crypto is one, the major crypto that determines the direction of other crypto is Bitcoin. So before you do anything, you want to see how Bitcoin is doing. If Bitcoin is going up, other ones will definitely follow and go up. If Bitcoin is going down, others will also go down. And this is the catch. Bitcoin is so strong that it doesn't move that fast. If Bitcoin goes up 1%, this ones here probably go up. You see some of these ones that will go up 200%, 300%, 1000%. If Bitcoin goes down 1%, some of this will go down 1000%, 2000%, 3000%. The one that are in the same class with Bitcoin, not same class, but they are closer to Bitcoin are Ethereum, Chainlink, Solana, Sui. So those ones are kind of like strong because they are utility coin, but they still follow Bitcoin. And also, with that being said, they don't move that very fast either. So your level is what will determine how fast you move. It's the same thing as stocks. If you're doing penny stocks move very fast, they give you quick money. Meme coins move very fast, they give you quick money. And they move very fast to the downside too, and they can make you lose money very fast. But as we all know, crypto is very, very volatile and it gives a lot of money. But we just have to understand how to navigate the market. So from this crypto bubble, if we look at up here, we see hour. So this is how these coins have been doing in the last hour. Within an hour, BNB has gone up 1.1%. Within the last hour, shares has gone up 2.2%. Within the last hour, ETC has gone down 0.6%. FLR has gone down 1%. So this will tell you how the market is doing. So if you go to day, what you see here is how the market has been doing overall in the last 10 days. Look at Quant. Quant has gone up 10.9%. If you trade this Quant with something we call leverage, leverage is something that you put like $100 of your own money and they can give you maybe like $20,000 or $50,000 to trade with. So let's say I trade with $50,000 and I $50,000 leverage and I put $100 of my own money and I buy Quant. That within a day now, that Quant would have given me 10%. And that 10% would have been what? $5,000 profit. So that $5,000 goes to me. They're not going to share the profit with me. So basically, I've turned $100 to $5,000. So the advantage of leverage is, and then people be like, okay, well, if you make $5,000 from 50,000, you can also lose the 50,000. No, you can't lose 50,000 because they won't let you lose 50,000. They position the program in a way that if you trade with leverage and you lose and you lose and you lose $100, once you lose the capital, the initial capital that you put in, they'll close your position. So what you're actually risking is your $100. Well, now you can leverage other people's money, which is the broker's money, to make something big out of that $100, out of that $100, because now you're turning $100 to 50,000, to $5,000 within a day by using leverage. So as we are learning all this, another thing we need to understand is leverage and how it works, how we can take advantage of leverage. So leverage is different based on the platform or the broker that you use, which is another topic that hopefully we'll be able to get to today. So this goes down. So we have day, week, month. As we can see, as we change the stuff, the information kind of like changes. Within a week, Dash has gone up 101%. So let's say you invest on $200, money would have turned to $400. You invest $1,000. Within a week, it has turned to $1,000 turned to $2,000. And that's 100%. So how many business do we know of that will give you 100% within a week? That will give you 100% within 2 weeks. And because the market's kind of slow right now, that's why this 100% is what crypto will do in 1 minute. It's what crypto will do in 5 minutes. But even with the condition of the market, it still moves so well that you make 30, let's even say 31%. I pick 31% in 1 week. So if you now combine this with leverage, you have $50,000 leverage and you make 31% of that in a week. You make 100% of that in a week. That's $50,000 profit. So, and the list goes down. So now, like I said, with crypto, you need to understand the market and how the market works. So how do you know what to trade in crypto? That will take us to the next website that we need to know for crypto, which is called the Coin Market Cap. Remember, all these things that we're talking about is still how to find and fundamental. We haven't gone to technical because technical is where we really like, need to like where we get pretty much everything that we need from. So this is Coin Market Cap. This is where they list all the top coin according to based on their performance, the market cap, and the volume. So as we can see here, the number one coin we have here is Bitcoin. Then we have Ethereum, we have Tether, we have BNB, and the list goes on. So from here, you can have the information you have from crypto bubbles as well, because here you see how the market is doing. So this is 1 hour, 24 hours, 7 days. You can filter it and you see the volume and everything, the market cap. Market cap is very, very important in trading crypto. But dive deeper dive deep into the website. Like, there are more stuff that this website will help you with. This will tell you the overall health of the crypto market. You see what we have here that says fear and greed. This fear and greed is what will tell you how people are doing in the market. Fear and greed is what will tell you how people are doing in the market. So you see, it says neutral 50%, which means people are not buying that much. People are buying, but not like before. The pump is not there, like how people will be rushing the market. So people are just neutral about it. They know, like, oh, rushing they you know how the hype is like, okay, when I'm sure we all know when Dogecoin came out, when Shiba came out, then this won't be here. It would have been here because people will be greedy. People are buying, they want to make quick money. But people that have better, good understanding of the market, some of them will be buying small sum here. They won't buy that much because it's neutral. But the best time to buy is when the fear and greed is at the fear area. When it's here, fear, because like the popular saying that when others are fearful, that's when you should be taking action. But when others are greedy, is when you should be stepping out of the market. So here at this point, people are buying, not that much. But when it comes down to the red zone, that's why savvy investors are buying. Because they know that regular people will not buy here. This is where they'll be selling instead. So they take advantage of that because those people are selling for cheap, We know how we do it. On Thanksgiving, we're all looking for sales. So all this stuff, they do sales too. But you just have to know when they do their sales. So the only thing about that is they don't have a particular fixed time to when they do the sale, when they run the sale. You just have to do it based on the information that is out there. So whenever the market is at the red zone, is when they're doing the sales because that's where like regular people will be selling, but where the main like knowledgeable investors or traders will be buying. So all this is if you are going to be a long-term holder of anything, any coin. And also another thing about this website, it gives you information about the coin. So every coin, be it utility coin or meme coin, all these crypto are built they are built by professionals. They are built by all these tech guys. So you want to know the background of the team. Who are these people behind this coin? Because sincerely, that's what would some people will just buy, they will invest based on the team behind the coin. So if you read through the information on this website, it will tell you all the information about the team. Oh, you hear this person was a former CEO of this company. This person was the former CEO. This doesn't necessarily apply to Bitcoin at this point because Bitcoin has been around for a while and people don't really care about stuff. But this information is more relevant to meme coins that are new, first of all. So if you go to trending, you see most of the trending coin are new. It's not something that people really know. Look at it now. So this roll X in 24 hours gone up. Actually, Axie Infinity has gone up 68.4% within the last 24 hours. This one, Turbo Imofly has gone up 512%. So if you want to take advantage of this now, you're not just going to jump in. You want to click on it and see the team behind it. Okay, who are the people behind this coin? What is the coin about? Is it just a meme coin or is it a utility coin? From the infant stage of this coin, they usually come out as a meme coin. But as people are kind of like, buying into it, as people are kind of like, getting to like, understand the idea behind it, they can turn from meme coin to utility coin. When Bitcoin came out, it was first a meme coin. When Ethereum came out, it was first a meme coin. But as people start to accept it, they start to see like, the use, then it turns from meme coin to utility coin. It started to become stable. So as this coin now, it's new. Well, a lot of people will be careful with it. While others are being careful, some people have already made money because people that bought it like 24 hours ago, if let's say you don't catch the old move from 500%, you probably would have caught 100% or 200%. If you catch 200%, if you catch 200%, that's you turning $1,000 to $3,000. So this might look like, oh, something distant, but if you really look at it, you just have to look. It's me sitting here now looking at the website, just looking at the website and making decision that will make me money. I don't have to get on the bus to travel to anywhere. I don't have to go do anything anywhere. Just be on here. At least, let's say you're doing this at your free time. It's the same thing. And the good thing about this, I can be doing this and be watching TV. I can be doing this and be still be doing other things that I want to do. So I'm doing whatever and I'm still making money. Because sincerely, the goal is to make money and to attain freedom. So in order to attain freedom, you can't just depend on one thing, or let's say like your 9 to 5, because 9 to 5 is you trading your time for money. But when you're doing this, what you're doing is you risking your money for freedom, freedom of time, freedom of location, freedom of wealth, freedom of every other thing that you can think of. And you're not just trading, you're not risking your money. You're risking your money with the right way, with knowledge, because you know what you're doing. So this platform, Melon, in addition to Crypto Bubble, can tell you what to invest in and how to invest in it. I'm going to take a step back to see. So we come to coin market cap right here. As we get into the website, you go to top, it will show you the top coin. This is ranking based on age and acceptance, how people have accepted them, how they've been doing. But if you want to go based on movement, how it's been moving, trending, just click on this. This will show you the percentage. So if you want to now day trade crypto, this is where you come. You come here, coin market cap, you click on trade trending. So these ones that are moving very fast, that are kind of like moving, that have good volume and good market cap, are the ones that you want to pick and you now take to another the technical analysis platform to analyze it, so you can make an educated decision on where to enter a trade on it and where to exit a trade on it. So if you are going to, so you said prediction, that's this. Also, this platform will predict some stuff for you. But the good thing is, the one thing I want to say is we don't want to go by their prediction, because this can be just to this is this can be to just manipulate the market. So they can give information based on knowing that, okay, some people depend on the information that will be going from this website, and they'll give information based on the fact that, okay, they just want to manipulate the market. So if you depend solely on their information, you'll be a victim of the manipulation. It's good to see the information, you add it to your own personal information, in addition to technical analysis to make a solid decision. So if you click on most visited, it will show you the most visited coin. Which coin are people really looking into? Which coin are people really buying and selling? Then you can see new. So new is the coin that are just released, newly released. Here you see when you're looking at these ones, you have to be very, very careful with the new ones. Because the new ones, some of them will just be fake coin. They release it, one, to kind of like rope people. You just buy. After buying, you won't be able to sell. They rogue you. It's called rogue. So you don't want to be a victim of that. And these are the meme coin. They release them, like you go to the meme coin, you go to the website, you see how fast these coins are being released. Every hour, every minute, there's new coin. Some of those coins are good ones that will go up crazily. Some of them are not that great. They will go to zero within a short period of time. But the ones that you catch that goes up, you can catch crazy move. Like 200%, 2,000%, 5,000%, 10,000%. I don't know if you remember when Dogecoin came out, when coin came out, when Trump coin came out, when Dog with Ad came out. Those are coins that people turn $100 to $1 million. When people turn $1,000 to $10 million. But the greedy ones turned $1,000 to $1 million, and they didn't, because they didn't sell on time, they lost everything back. So when you're trading crypto like that, you cannot be greedy with it. You have to set a goal like, okay, my goal is, oh, this is what my profit target is. When you get to your profit target, another thing is you don't sell everything. Let's say you buy 1,000% of this rule X now, and it goes up, let's say 2,000%. You don't want to be too greedy. So out of your whatever you have, 1,000 units of it, you can sell some like quickly. Let's say you sell 500 or 600. So now you're already in profit, massive profit. Then whatever you have left is called a runner. You leave that to run. So if that goes to zero, you have nothing to lose. And if it goes up crazy like 1,000, 10,000, 20,000%, you still make more money. So you have to set all those things like, okay, you know what? When I enter, this is my first take profit, and this is the amount that I'm looking to take out as first take profit. And for the crypto coin, there's a website we call Crypto Panic. Especially if you are trading coin like Bitcoin, you always want to be on Crypto Panic for news about crypto. As we all know, crypto is news driven, is heavily um news driven. It has to, like, is news is very important when it comes to crypto. No. So crypto is news is very important when it comes to crypto. If you are looking to trade long term or short term, you always want to pay a close attention to this website. So this is where you see what is going on, especially with Bitcoin. Anything, any news that can impact Bitcoin or other crypto is going to come from here. So if we click on top news, this will arrange it. See now, as the news is released, it will give you the time and everything. So it says 13 minutes ago, it said near protocol, nearest breakout, a multi-year wedge tidings. So if you read this news now, it will tell you near is a coin too. So based on this news, if it's positive, it can make the near coin go up massively. If it's negative, it can make it go down massively. So you read through the news to give you the information on how the market is going. Like, you will be able to kind of like, understand how it will impact the market or the direction of the market. So I don't want to spend that much time on fundamental, because I am a firm believer of technical, and I know with technical analysis you can do well with tech, because fundamental doesn't come around that much. But with technical analysis, you go in the market and you make money pretty much every day, every day, every day. Be it Bitcoin, whatever you're trading, you can go on there and make money every day. So we've spent an hour of this class to look at fundamental and how to search up all this stuff. So now let's go into technical. So for technical, this is where charts kind of like, comes in. With charting, you don't have to do much. Just do the basic. So there's something we call support and resistance. Let me go to the platform we're going to be using for this is called TradingView. So TradingView, they have free. They have the free and the paid one. So this is TradingView, tradingview.com. And here, top right, this is a charting platform. On this platform is where we kind of do technical analysis. So like I said, whatever we're going to trade, we want to do it both. We want to look at both the technical and the fundamental aspect of it. So if we understand technical, it will be easy for us to make technical decision. Then we combine that with fundamental to make something good out of whatever we're looking to trade. So whatever we're going to be looking at here today, we're not going to do that much. We're just going to look at basic stuff. Like I said, every market move, they move in direction. So they go up, sideways, down, sideways, and up. Every market, anything that you want to trade, it doesn't matter what you want to trade. The movement is going to go, it's always going to be up like this. It's always going to be either it's going up or go sideways or come down. It's always going to be that. So if we understand that, it will make it so easy for us to make our decision. It will make it so easy for us to make our decision. But before we go deeper in that, there are a few things that we need to know about this market. Like I said, we say we have investors. So there's something called time frame. From time frame, we have when you click on here, where it says it's going to be whatever time, like, it can be 15 minutes, it can be 20, but wherever you have a time, like 15 or 20, you click on it, it's give you a drop down. And this is where you see all the time frames that you can, that are available. So if you go to 12 months, 12 months basically means that it will take 12 months for one candle to form. So if I go to 12 months now, the screen is going to change because one candle represents 12 months. So basically, what this is telling me now is that Tesla in the last 12 months, because one candle is 12 months, in January 10, 2004, this is all the move that Tesla made. This small candle here. But if we come to this big one now, this is January 2nd, 2020. This is the move that Tesla made in 2020, the whole year. And here in 2021, this is the move. In 2022, Tesla tanked massively, and this is how the move it made down. Well, so while we're speaking of that, let's look at candle. Let's kind of go into how this candle works, how it forms, so you can give us a better understanding of the move that I was talking about. So for this green candle, it's called bullish candle, which means buyers are in charge. The red means bearish, which means sellers are in charge. So for every candle to form, it's either go up or down. Like I said, green is buyer. So for the green, it usually opens from the bottom. It opens from here and it will go up. For the red, because of sellers are always pushing the market down. So it's always open from here and it will push down. So if the market open green and it wants to continue with the trend, it will just continue going up, 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 up like this until it closes. So this candle right here, let's say it opens on January. This opens on January 1st. When we say Happy New Year, this candle opened. And December 31st, the last day at December 31st, 11:59, this candle closed here because closed here. It opened at the bottom because it's going, it opened at the bottom and closed up here. So this is all the activities that happened with Tesla in 1 year. And the following year, which is 2022, this market opened. It opened from here, but because the sellers were in charge, they pushed the market down. So it opened from here on January 1st, 2022, and came down all the way down here on December 31st, 2022. So Tesla stock did extremely bad that year based on this one candle. So this is 12 months, which is a very long time. So if you want to like break it down now that, okay, you know what, I want to see something shorter than 12 months. Let's go to 1 month. So when I click 1 month, change this to monthly, which is 1 month per candle. So now this is telling me that this is what Tesla market is doing per candle every month. So each candle represents 1 month. Basically, what I'm trying to say here is that whatever time frame you have is what each individual candle will represent. So I mean monthly, one candle means 1 month. This is how the market did perform in 1 month, one candle. So if I change this to 1 hour, this is telling me how Tesla market is performing every hour. So one candle is 1 hour. One candle is 1 hour. So if you are going to be an investor, for an investor that's looking to hold this for a very long time, it's okay for you to start your analysis from weekly. So if I go to weekly now, this is 1 week. This is 1 week right here. And this is the performance. Each candle represents 1 week. So you put all the candles together. So how many weeks do we have in a year? If you count one candle, each candle multiplied by the number of weeks we have in a year is what will give you 1 year, which is one candle when you go back to yearly, when you go back to 12 months. So this one candle that forms here is what you will get when you divide 4 weeks by 12 months. If you divide 1 week by 12 months, is what you will get. Whatever you get is the number of candles that you will have here. So now for us to have proper solid analysis, we don't want to dwell, we don't want 1 year is too kind of like far out. So it's better for us to start with less than monthly. If I'm looking to hold now, okay, I want to buy Tesla stock and I want to hold it for a very long time. Like, so I'll come here instead of just going to buy. I've looked at the fundamental, look at their balance sheet, I'll see how they're doing. Now I can come here and mark the chart. So there's something we call support and resistance. So support is what prevent the market from going down. You see how the market came up from here? It came up, come down here, couldn't break down. From here, it went back up. So this line that I drew is considered a support line because it prevents the market from going down. If I scroll to the left side now, I can see how effective this support line has been. So basically, each time the market comes up here, what happened? It came here, came down, went back. It came from here, came down, went back up, came down, and eventually broke it. So it was a support at some point. So from here, from these candles here, it became a resistance. Resistance means like, prevent it from going up. Support it prevent it from coming down. So it became resistant and it prevent the stuff from going up. So from here, when the market came from the bottom, when it got here, it couldn't go, it came down. When it got here, it couldn't go, it came down. Then when it eventually broke it, this line turns to support. And it came back here. When it came back, each time it came back here, what did it do? It went back up. So now that it's up here, if we look at it, when it get up here, wherever we have multiple candles form, and we see any form of rejection, is considered a support line. Remember, each candle is monthly. It takes a month to form. So when Tesla opened for the whole month, this candle closed here. It couldn't go all the way up. The following month, this line rejected the next candle. The next candle came down. And then we have another candle. It came down. It couldn't go all the way down. The next one went up. It couldn't go all the way up. The line prevented it. This next one couldn't go all the way down. The line prevented it. And this is the current month now. So this one is still running. It's just closed. You have 13 days. And the good thing is this is going to tell you it's going to show you the time and the days that it have for the candle have left before it closes. So right here now, this candle, current candle, have 13 days and 5 hours for it to close to make a full month candle. All these ones have made their month. They've made their month. They already closed. But this is the running candle, and it has 13 days and something to close. So you see these two lines that I drew. If we go to lower time frame, let's say we go to weekly time frame, you will see how massive this line is, how the number of candles that we have in there. You see all this candle, this is an activity that happened. So each week, so let's say from 4. It takes 4 weeks, make a month. So this 4 candles is what happened with Tesla in a month. So when we go to monthly, when we go back to monthly, what we have here, this candle, actually this one is still running, but this green candle is 4 candles when we come back to weekly. That candle is 4 candles when we come back to weekly. So let's say 1, 2, 3, 4. This candle is 4 candles, and those 4 candles is just 1 candle on daily. All this candle took 4 weeks. So if we come back to daily now, I mean monthly, it's just this 1 candle. So now with the support and resistance line that we drew, so this, even though I drew it from monthly, but in weekly, you see that we have activity, all the activity was inside this line. So basically, what I want to look for is either for these candles to break out of this line and continue up, or come back into this line and continue. So it can either be like moving within this line, this bottom and the top line, or to break out of it and continue going up, or break below and continue coming down. So that's the purpose of this support and resistance line, because the job of the support line is to prevent it from coming down, and the job of the resistance line is to prevent it from going up. So when it breaks out, so you see how it came out, it broke out here. Normally supposed to continue going up. But with the way the market works, there's something they call manipulation. And this is where the market makers make their money. Because they know that we have retail trader like you and I that want to come here and make quick money. So they try to do everything possible to take our money before the market goes to its original direction, which is what is trying to happen here. Because normally, if there's no manipulation, as soon as this market break out of here, it's supposed to continue going up. But because they know how we think, they will make it go up to break out. And this move down here is called manipulation. So as time goes on, retail traders now understand how market makers manipulate them. So instead of just buying when the market breakouts like this, they don't buy. They now wait for it to retest. So this was supposed to be a retest. This was supposed to be a retest. So a retest would have been that, okay, when this thing broke out of here, it came back down, but it didn't break this down. Rather, it just give you another green candle that shows that the market want to go up. Let me look for a better candle to explain that. So for this one, the market came from here, it came down, and then we have this green candle. So if this candle had gone up, this would have been manipulation. But it didn't go all the way, it didn't break the resistance. It stopped at the resistance, and then we have this red candle after. So the market started from here, it went up, came back down, tried to look for a retest, but it broke this resistance line back down. So when it broke it down here, we have this candle that this line rejected, and then we have this red candle that confirms that the market wants to continue going down. So this is the retest that we were supposed to look for here, but we couldn't get a retest. So the market came down. So this might be a manipulation because the market was in this line, this top and the bottom line for a while, going back and forth, and eventually broke it. Normally, when it breaks it like that and we have a retest, then we have a continuation candle, that would be a good time to buy because now we have a confirmation that the market will continue going up. But instead, when the market broke out, it came down. This candle was is not supposed to come back into this area, but it came back. So this is a manipulation. So now we know that, okay, you know what? It's now time to buy. Even if I want to sell, I need a confirmation to show that, okay, you know what? It's going to continue going down. But from the look of things now, what we will just do is just wait. So if we now have another green card, this kind that is forming, if we now close out here as green, I know that, okay, now I'm good to buy because what I have down here is manipulation. All this is manipulation. This doesn't count. This is just a way of market maker taking money from the taking money from the retail trader. So now I'm just waiting for confirmation. So the next confirmation I'm saying is I need the green candle to come out of this line. Now I know that manipulation has been taken care of. Then the market can now start going its original direction, which is going to be up, which is going to be up. So this information is what we'll combine with fundamental to make our decision. So if you are going to now be a, a day trader or a swing trader, because investors are the ones that are holding for that long. So as a day trader, what you want to do is now you want to start your own analysis from lower time frame, let's say 4 hours, or let's say daily. You start your analysis from daily, you draw your support and resistance, and you look for your break and retest candle to take your trade. So now let's say, okay, I want to trade Tesla on Monday. What do I need to do? Today is Saturday, weekend. I know the market is not open today and is not open tomorrow. But what I can do is I can prep myself for Monday. So I'm looking to take a trade that I'm looking for a trade that I can take on Monday and either sell on that exit on that same Monday, or I can exit before Friday. So if I'm looking to hold it until next Friday, then I want to start my analysis from maybe monthly. If I want to buy and sell the same day, I start my analysis from weekly or from daily. So let's start from daily. And as we can see, daily structure is really like it looks easier. It looks easy to kind of like, draw our support and resistance. So like I said, support is going to be from the bottom, which prevent the market from going up. So we see area where the market struggles to go down. Like here now, you see how the market is floating here. This area now, market is floating. Like it came here, up here, up here, up here, up. Now it's coming down again. Here, up. So we also want to mark the area where the market struggles to break out to the upside. So this is another area where the market struggled to break upside. So it went from here, it pushed back down, here, it pushed back down, it got here, pushed down back. So here, this here is manipulation. So you see what happened? The market came there, and what happened after? It came back down inside this line. So this is just manipulation. But so the original movement of this market is inside this range from this top here to this top here. So knowing this alone will help me to make a solid decision to trade Tesla on Monday. So this is daily time frame. Every candle form take 1 day to form. And in daily time frame, I already see that all the movement is between here and here. So if I now go to lower time frame, like 4 hours, remember as you change the time frame, it represents how long it takes each candle to form. So that you see that the representation looks much better here. And we have more space, more move. So from the top to the bottom, and see the movement is still within. So now, if I want to trade Tesla on Monday, I know that, okay, everything I want to do is going to be within this range from here to here. And I'll consider this too because I have a couple of rejection. This line serve as a support and several, like, here. And if I really want to, if I really, really want to be sincere, I see that, okay, even this area is some type of manipulation too. So now we have manipulation to the downside and manipulation to the upside. This is under manipulation to the upside. So originally, Tesla is trading between this resistance and this support line. So to trade this now, with the current where the market is at currently, I can either wait for it to on Monday. I just wait for Tesla to come down here and then look for a trade to go back up here. Or I can take it from up here and look for a trade for it to come back down here. So each candle take 4 hours to form. That's going to take time. That means for the whole of the session, because the market is open from 9:30 to 4:30. So 9:30, 10:30, 11:30, 12:30, 1:30, 2:30, 3:30, 4:30. That's like 8 hours. So that means we're only going to have two candles, just two candles on 4 hour time frame. That's going to take some time. We won't have that much information. So, and we're looking to buy and sell the same day. So it will be better for us to go to lower time frame. So if you go to 1 hour time frame now, we know that we'll have 8 candles for before the market closes, which is still not that much. But as we go down in time frame, now in 1 hour, we see that we have more candles. And now we have more data that we can actually play with. I have opportunity to draw more support and resistance line. So basically, support is the area where we see that the market is struggling to go up. And resistance is the area where we see that the market is struggling to go. Resistance is the area where the market is struggling to go up, which is here. You see, the market come up here, it couldn't go, it broke down. It got back here, it couldn't go, it broke down. We had this manipulation, it eventually came down. So this line at the bottom that is preventing the market from going down is the support. So I only drew from daily to weekly, I drew two. When I got here, I added one to it. Now I have more support and resistance area that I will be looking at to take my trade. So now basically what this means is that I'm looking for a trade at each support to go back to resistance, or from each resistance to come back to support. So to make this more clear, we just want to look at it from the bottom. So let's say with this line that everything I draw, everything I have here now, on Monday, I want to follow the trend of the market. How has the market been moving? I don't want to go against the trend. I want to follow the money maker and go the direction that they're going. So how do I follow them? You see that the market started from down here and started going up, come down, go up. So the original trend of this market is an uptrend. So now, how do I want to take advantage of this market? At this point, I'm not going to be looking for a sell. I'm looking for a buy. Buy in the sense that I'm looking, because the market structure is saying that the market is going up. I'm looking to follow the market up. So what I want to do is I want to always wait for the market to come to support, which is where it is right now. From the look of things now, where the market is right now is actually an area of opportunity. So here, this support line has been proven strong multiple times. From here, it went back up, came down, went back up, came down, went up, get manipulated, go up. Now it's back on that area. So we just have to wait for us to get a confirmation, then to trade it back up here. So if we look at the news and we see that, okay, there's no news that can change the direction of the market, like I said, the first thing we do is to look at the news. So if there's no news that can change the direction of the market or manipulate the market, then we want to make our decision solely on fundamental and technical analysis, which is drawing support and resistance. So if there's no news, I've already canceled out news. There's no earnings coming out. Earnings like, okay, Tesla is releasing their numbers like, oh, this year we make this amount of money. This year we lose this amount of money. If there's none of that, so then we know that, okay, whatever decision we make is solely on technical, and then we can rely on that. So if I come on Monday now, there's no news, this is what I'll be looking for in Tesla. After all this support and resistance, The market is currently sitting on a support. And let me point out something real quick, which is a signal to know when to enter a trade. So at every support, when the market comes back down here, you see that we have small red and long green before the market goes back up. The same thing here, it came down. We have small red, long green, the market goes back up. Here, we have small red, long green, the market goes up. Same here, small red, long green, the market went up. Here, we have red, long green, market went up. So what that basically tells us is that at every support, we need a signal to confirm that the market wants to continue going up. So right now, where the market is now, I just want to wait for that signal, which is going to be a small red and long green. So this current candle that is forming is a red. So if I wait for it to finish, and then the next one just come in and it comes out green like this. If it comes out green, like the next one comes out green and forms something like this, we have small red and long green. I know that, okay, now the market might want to go back, continue going back up. So we now know that, okay, yes, the market wants to continue going back up. So what I just put here is called trend line. Trend line is another confluence that we can add to our support and resistance. So basically, trend line is just another form of resistance. So for the let me like go over how we draw this line. So to draw a support, we need a tool called the horizontal line. So when you come here, the first two, the second two, we have this one, we have the second one. When you click on the arrow in front of it, you see here, it says horizontal line. The horizontal line is what will give us the straight line. And then we have to like this one, our favorite. I've kind of like, mark it as my favorite. That's why I have them up here. So when you come here, you say horizontal line, you click on this star icon, it's going to save it and keep it on your toolbar so that you won't have to look for it all the time. And then we have horizontal ray. If you don't want to go all the way, you just need like, I need a quick mark. I don't want to mark it all the way down. I can use the horizontal ray and just say, let's say I just want to mark this area now. Just mark this area from this area to this area, this point to this point. That's horizontal ray. I don't have to go all the way. But if you use the actual horizontal line, it will mark it all the way. Like you scroll back, you see it will just mark it all the way. And that is good for like, general analysis. Because when you mark it, you can kind of like, flip back and see how strong the line is. So what determines the strength of the line is the number of time it's actually rejects or the market respects it. So like this line, for instance, I drew it from way back. And if you look at here, you see that the market respected it here, respected it, it broke it, it respected it here, respected it here, respected it here, respected it here to the upside, respected it here to the upside, it broke it, came back, respected it here, up. So this tells me that that line is strong to an extent. So basically use the horizontal line to look into the past, way into the past, and use the horizontal way to just kind of like, stay in the current market. And you don't want to dwell too much in the past. You want to kind of like move with the current, what the market is saying or doing currently. So now that we've marked the support and resistance, if we now throw a trend line on it, this is a trend line. It's found from the same place. You just click on the arrow in front of the second two, and you click on trend line. So when you mark, so for trend line to be valid, you need minimum of 2 touches or 2 points. So point is, like, okay, this one now, from here to here now, you see how the market started moving down from here. When I see the first point and the second point, I'm like, okay, a trend line can help guide me with what this market is, the current formation of the market. So if I come here and click on trend line, Because the market is coming down, I know that I want to grab it from the top and scroll and come down. So to effectively draw this, I took it from the first point, which is the point A, draw it down to point B, which is here. After point B, I'll just keep going. I follow the point. I'm not worried about the candle or what the candle that is touching. I'm just following the point so that I can have a solid trend line. So now from this, now we have point A, point B. Point A, point B, point A, point B. So when the market came here at point C, you see what happened? The market broke it. It broke it up. It broke it and went up. Then after that, it came back to retest this. So here, this point, we have the support line and the trend line, where the support and the trend line meets, which make it very strong. It's called a confluence. So having a confluence here is going to be whatever decision, whatever the market, whatever reaction the market make from here is going to be a very strong one. Because if the market should break the trend line, which it already broke, and now break the support line, it's it's going to be the probability that it's going to come down is going to be very high. Because now we have confluence. We have two strong confluences. The trend line has been respected a couple of times. It came from here, down one, down two. So most time on the third one, the market is gonna most likely gonna break it to the other side. So like this one, I broke it. It came here first time, it couldn't go up, it came down. Came down second time, couldn't go up, came down. The third time, it broke it, it went up, and then come down. This is gonna be considered uh retest of the trend line, even though it's a manipulation because it broke it and it went back up again. And now it reclaimed the trend line by coming back in. So now the market is still within that trend line and under the same support on the same support line. So if we have an entry signal here, it will be safe to trade this market from here back to the top upside. So another tool that we're going to be using now for our risk management is called, when we count from here, we have 1, 2, 3, 4, 5. We go to the fifth tool. We have long position and short position. This is what we use to set our risk to reward. Because for every trade, you have to know how much you are looking to risk and how much you are looking to make. So if I'm coming to risk $100, I have to know that, okay, the current price of Tesla is $437.63. So is that I'm using leverage, or I'm trading option contract, or I'm trading fractional. So because I know that my $100 won't be enough to buy one Tesla. But if I'm using leverage where I put $100 and they give me $10,000 or $100,000 to trade with, then I can trade Tesla. So let's say I have $100, I'm using leverage. Now I have $50,000 leverage to trade with. So I know that, okay, out of my $50,000 leverage amount, even though I have 50,000, I cannot take a $50,000 trade at once. Because if I take a $50,000 trade at once, if it goes against me a little bit, I lose $100. Right immediately after I lose $100, they'll liquidate that account. They will shut it down because you lose your money that you put in. The broker will never allow you to lose their money. They give you their money to use to make more money, but they won't give it to you to lose. The maximum you can lose is the amount of money that you deposited, your own money that you deposited. So understanding how to use leverage and risk management will really help you. So instead of going into risk 50,000 straight, with leverage, you just risk a percentage of your own money. So let's say I have $1,000 of my own money that I deposited. With risk management, normally I'm not supposed to risk more than 1% of my own money. 1% of $1,000 is $10. So I'm not supposed to be looking to risk more than $1. So let's say 5%. I want to risk 5%. Now I want to risk 5%, $5. But with leverage, that $5 might give me up to 10,000 or $15,000 leverage. So that means I can buy up to $15,000 worth of Tesla. And if it goes my way and I make profit, let's say I make 10% of that $15,000, the whole money will come to me. So basically, I've used $5 to make whatever return I get. 10% from $10 on $10,000. So now that we've talked about a little bit about risk management and we talked a little bit about the technical, now we want to position ourselves to take this trade based on the technical that we've talked about. I know it's it's a lot of information, and like I said, this is just at least we're going to be here for like what 1 hour 30 minutes. So it's not something that you can grasp in 1 hour 30 minutes, but you have an idea. So since we have all this trend line, we understand that three touches on trend line will kind of like can cause the market to go a different direction, or it will show us if the market want to continue in that direction. So we have the first trend line, we have the second trend line. So this second trend line I just moved to, we have from up here, it came back down. The second touch, it came down. So if we have a move from here now, we just want to be cautious of this trend line. Or actually, because of the second one, so the third time, there's a possibility that we'll break it up. But also, we want to be cautious of it because it rejects it. So if we're entering a trade here, we can come here now to position to do our risk management. So okay, so this market is going up. Now we're looking for a long. So we go long position. So here from this support line, I'll click this. So my final target will be here. It should not be final. My final will be up here. My final will be up here where the market was at some point. And then my stop loss, this red area is like my stop loss where what I'm looking to risk. So because of how the market has been performing, has been moving, we do not if we get a signal to go back up, we do not expect it to break past this support line or this trend line. And if the market should respect it and go our way, we expect it to go from here at minimum to here. And if it should go like make the massive move at once all the way to up here. So if you look at the risk to reward, here is saying that we're having 7.58%. So basically we're risking let's say we said we risk $50. So basically we want to risk $50 of our money to make $350 profit without leverage. So we use $50 to make $350 leverage if we go straight to our area. And if we can like react at this resistant area, we're looking to use $50 to make $250 in profit. So to take this trade, I don't have to do anything. I have it set up like this. I just want to wait for my confirmation and I'll take the trade, set my stop loss that if the market should come back, Tesla should come down to 430, 132, it should kick me out and stop the losing. And if it should continue if it goes my way, when it gets up here, it should take some profits, or you can close your complete position. If you are okay with whatever profit you turn $50 to from here to here, you turn $50 to $200 to make $250 in total. If you're okay with that, you can set it to close your position that when the market gets to 456.68, you should just close and keep your profit. Or you can target all the way up here that no, even if it gets, it shouldn't stop. It shouldn't close. It should still, you strongly believe that to come up here, and then you want it to come up here for you to make um $400 in profits. So this is us just kind of like, capturing not too basic. And I try not to make it too basic because we have people here that already have like, some understanding, they know some stuff. And in order for them to benefit from this, it's better to just stay at like, cover basic, cover average, and cover like we didn't get to like to pro level, but with the information that we've shared here, we have basic and intermediate kind of like level of trading. So with this being set up now, I just wait. Once I have a confirmation, I'll enter my trade and leave it. So if it goes against me, I know that okay, if it goes against me, it shouldn't go past this level before it kick me out. And if it goes my way, I have all the way up here. So imagine risking $50 to make $400 and $400. Yeah, imagine if you put $1,000, you make what? $5,000. I mean, sorry, you make $8,000 because this is one to eight. So you risk $1,000 to make $8,000. You risk $50 to make $400. You risk $100 to make $800. So at this point, what will matter is your position size, the amount of money that you're looking to risk. And you hear that people make $50,000, they make $100,000. They're not doing anything different. The only thing they do different is their position size. They set up everything that they see will see will be the same. But the risk appetite is what will determine that will make the difference in what we make. So some people will risk $100,000 now to make $800,000, $900,000. So you put $100,000 to make $900,000. You put $1,000 to make $9,000. You put $100 to make $900. So now we've looked at fundamental, we've looked at technical, we've looked at how to find stock to trade. So, but back to what we started with. It doesn't have to be Tesla. What we want to do, the first thing is we go to investing.com to see if there's any news coming, especially we are in the US, that will affect the US market. Like I said, it's going to show US, and it will show us the strength of the news, how much impact it will have on the market. Then we can go to FinVix to look at to just screen. It's for stock screening. So we just screen the market and see the the instrument or the stocks that have the the um the potential to kind of like do well or to move faster for the day based on the volume and how they've performed pre-market. So we have pre-market, which is before the market opens. It's usually very early in the morning till 9:30 when the market opens. And then we have market open which is 9:30 New York time till 4:30 New York time, 4:30 p.m. New York time. And then we have aftermarket, which is from that 4:30 till when the market will reopen again for pre-market. But you want to do it's better to do your transaction, your trade during the market, but you use the information from pre-market and post-market to prepare yourself and make decision. So that's where the screener comes in. So when you grab the screener, you look at the stuff, how the market is doing, you screen the overall market and see how the market is doing pre-market, and you pick your stock from there and bring here now to analyze, find support and resistance based on post-market and then pre-market movement, and then you wait for your entry, you get your entry, you set your trade, and you leave it to run. And the good thing about this is even though we're in 1 hour time frame, it doesn't matter. One candle can just fly from here all the way up here. One candle can fly from here all the way up here. One candle can fly from here down against us. But with proper risk management, we already know. And the good thing about trading is the only industry where you determine how much you want to risk for infinite profit. If I'm coming now with the education that I know I have, with the knowledge of the market that I have, there's no way I can go bankrupt or go and or lose the amount of money that I don't plan to lose, provided I follow the rules. If I don't, the only thing that will make me go that deep or go down deep like that is if I don't follow the rules. I don't apply the knowledge that I know. And like I said from the get-go, if you have knowledge and you don't apply or you don't follow it, you are as good as the person that doesn't have the knowledge. Because what distinguishes you from other is the knowledge that you have. So that knowledge, if I apply it, if I follow it, I already know that, okay, this trade I'm taking today now, I'm only going to risk $100. So with my setup now, I know I'm risking $100. I'll just leave it. If the market, I forget to set it up, the market go against me, I'll lose that $100. And if it go my way, I know that I'll make $1,000. So with my analysis now, with time, you know your win rate. So if I know that I have a 50% win rate, so if I take 10 trade, the probability that I'll win 5 is high, and probability that I'll lose 5 is the same. So I win 5, I lose 5. If I lose 5 trade with this setup, I lose $100 5 times. That's $500. If I win with this, let's say, okay, I even do 2 to 1. So I use $100 to make $200 5 times. That will give me $1,000. So 1,000 at my times $500 that I lose is I still have $500 profit. So there's no way I will lose. And that's how I can turn trading to a career. I can turn it to a profession because I know my win rate, I know my risk management, and I'll just stick to it and apply it. So now I know that, okay, every day I want to risk $100. When I come to the market, I'm coming with the intention of risking $100. The good thing about it is I cannot lose more than that $100 provided I follow my rules. And on the positive side, I can make way more than that $200. So at risk two to 1 to 2 risk reward, let me set it. Let me actually set it that way so that it will make more sense. So at 1 to 2 risk reward now, I set it like this that okay, if the market should go against me, come down this way, I'll lose $100. If it go my way up onto this area, I'll make $200. And I have 50% win rate with this formation. So that means if I take 10 trade, if five should go my way up this way, I'll make $1,000. If five should go, the other five go against me down this way, I'll lose $500. If I subtract it, I'll still have $500 profit. So this one is fixed. It can never go beyond this, provided I set it like that. It's fixed. I'll only lose $100. But this is not fixed because if the market is going and I see that it's going, if I don't close it, I can leave it to continue running and it can continue running to this place now, which will make me $250. It can continue going, continue going. I can continue following it, which will get up here and make me $800. So this one trade, I risk $50 to make $800. I mean to make $500. So I can only lose $100. I'm $50, but I'll make $400. So now if I now multiply it, if I win 5 of this, that's $2,000. And I lose 5 of this, which is $250. 250 minus 2,000, whatever I have left is profit. And that's what makes trading a very lucrative stuff, provided that you follow the rules. So you now increase the number. If I risk $1,000, like this thing should go against me, I lose $1,000. If it go my way, I'll make $8,000, $9,000 with my money. So $8,000 profit. So if I do it 10 times, I lose $1,000 five times, that's $5,000. I make $8,000 5 times, that's $8,000 5 times, that's like $40,000. So if I make it goes my way, I make $40,000. Or let's stick to the basic one. Okay, it goes against me one time 1,000. It goes my way one time 8,000. So if it goes my way one time, I make $8,000. I have to lose another 8 times before I can be in negative. But I already have 50% win rate, 40% win rate. There is no way I'm going to lose 8 times back to back. So if the market is really volatile, I stick to my rule and make money, good money. If the market is not volatile, it's not going my way, I lose my set amount of money to lose. Which if we take this to our businesses or take to our this thing, for your job now, you have a fixed amount that you make. Yeah, even though you think, oh, you might not lose, but you don't look at the risk. Like Pastor said from the get-go, if you get fired, that's the biggest risk because now you have to go back and go start looking for another job. And God forbid if we are in this type of economy that we are now, that's really hard to find job. You don't know when you're going to find job. You see that the risk in that one is kind of like, it's not visible like the risk in this one. And the good thing with the risk with this, you can manage it. You determine what you want to risk. But that one now, you don't determine what will happen. It's not your company. You hire them. Even in your own business, you don't determine what will happen. Yeah, you put all the things together with the hope that, okay, customer will come. If customer doesn't come, you might not make money. If you have perishable stuff, some of the stuff will go bad that you won't be able to sell. You will lose it. So why I'm saying all this is that every business involves risk. But if you can manage your risk to the point that you determine how much you want to lose for a bigger return, it's an edge. But a lot of people don't know this. That's why they think trading is risky or trading is this. No, if you have the proper knowledge and you stick to the knowledge and information, you will be. It's something that, and the good thing about it, you can do it from anywhere and everywhere. If this is like Bitcoin is open now, if this was Bitcoin set up and we take the trade, as we talk here now, 2 hours now, it's enough to make money. It's enough to lose money. But the good thing is you lose the amount that you plan to lose. and you can make way more than whatever you plan. So the information we cover here is just the basic information, but I believe that we can still put together to kind of like, make decision. But if it's something that we want to look deep into, we can kind of like start building on this information to the point that we can kind of like, make something good out of this, as if we want to just make it like, side gig or something that we want to eventually start looking into to build like in a portfolio. As you build portfolio in real estate, you can build portfolio in stocks too. Because people do day trade. The return from this day trade, they use it to buy blue chips like Tesla, Apple, Bitcoin, and they'll be building that because they know that these are companies that will be around for a long time. So they buy all the stuff to keep for their children. You make money from here, quick money from all these small ones, day trade or intraday trade, and put the money into swing trade. You take the money from swing trade, you put it into dividend yielding stocks that will be giving you a return at the end of the year. As you're making money from day trade, you put it into that. You make money from that. So you're making dividend that will you're investing into the business. And before you know it, you build a portfolio. And that's how the portfolio is built everywhere. And some people make money from it, from this. They don't put it in a long term. They'll put it in something else, which is real estate that Pastor will be covering tomorrow. And then, just use money from there to build. And now you have two sources. Because now you have the market, the crypto, the money market, and you invest into long term, which is real estate. And that's how freedom is attained. Our time is fast spent. We're just going to take a few questions before we call it a day. I have a lot of other stuff that I have listed up, but unfortunately, we couldn't kind of go through because of limited time. But hopefully, we'll have another session as we go. Or basically, we can start building, like, do your own research and start building on we've talked about this now. The only thing that you need to learn now going forward is platform to trade with, which I'll quickly mention one or two. So we have the Wilbo. Wilbo is a platform that you can trade with. You just create an account, you deposit money, and you come to TradingView. TradingView is free for your technical analysis. Once you find your entry price, you copy the price, take it to Weibo, and place your order from there. You have your stop loss, and then you have your take profit, and just leave the market to do its thing, and that's how you go. So the platform to trade with is called Weibo. You can use Weibo. There are other ones, but Weibo is user friendly and it's very, very good for beginners.
Can you please help us spell the Weibo?
WE, I'm going to put it in the chat.
Thank you.
I posted a link to it. Okay, so I'm just going to take a few minutes extra to kind of like take a few questions before we round up with the class.
I'll mute myself. What's going on? Okay. Thank you so much, Brother Dayo. That was a very detailed section. I want to appreciate you for coming online today. I have some few questions. I know you answered one from the chat box. So on my hand, I just want to let us gain some insight into, I love leverage. When you mentioned leverage, I don't know, they also leverage in money market and stock. I thought it's only in real estate. So how do we identify the safe volume to invest with different shares? We have different shares, we have Tesla, and they are unique in their own way. So you mentioned that we should understand the safe volume amounts. So like Tesla, I know was it Tesla? You mentioned that you will not buy when it's not up to 1 million. The volume is not up to 1 million. So is it like that for all, like, is that a golden rule or it depends on each stock?
That's a very good question. So for all these blue chips like Tesla and stuff, they always have big volume. So with those ones, you don't have to worry about volume
Okay.
because people are always trading them. But when it comes to penny stocks, like when we go to Finviz, the stuff that we're looking at, other stuff that we're looking at, those are when we look trading anything below $5. That's when you have to worry about the volume. You have to look at anything less than 1 million. You don't want to trade it. So first thing, the one is if the price is between 0 point something to $5, you don't want to trade anything below 1 million in volume.
Okay. That sounds good. If you're sharing your screen, we are now seeing I think it started glitching again. So we can, well, I'm sure you're not. If you are, okay, now we're good. My second question would be, how do we assess brokers' leverage? I know you mentioned that while you're trading, I mean, for people that are starting out, are there requirements for you to be able to assess that? Do you have to reach a particular threshold in trading or something?
Yeah, that's a very good question. So for some brokers, some of them will want you to kind of put a certain amount, a particular amount of money to before you can use leverage. They call it margin account. But we're not going to go through that because that's like you need to put a lot of money. We don't want that. There are other brokers that don't require that much. And the reason is because they know that they set it in a way that whatever you put, you have access to leverage, knowing that once you lose the initial amount that you put, they will liquidate the account. So if you are doing Weibo have leverage, but there's a particular amount. They have a dollar amount that you need to put down in order for you to have access to the leverage. But we have other broker like Liquid Chat Pro. So I'm gonna put that in the chat as well. So Liquid Chat Pro doesn't matter. It doesn't matter. You can just put any amount and you have direct access to up to 1 to 500,000, 1 to 500. So basically, if you put 1,000, you have access to $500,000 leverage to trade with.
Wow. That's sweet. Thank you so much. Please, if you have questions, you can. This is a question and answer, QA session. So if you have any question, this is the time to bring them forward. If you are in a place where you cannot unmute yourself, you can send those in the chat box.
Brother Dario,
Yes, ma'am.
are you going to teach this again? I'm very much interested, but the information is too much for me to absorb at one time. And especially this leverage, I love it. I don't know, is it the same thing as option? Something like that? Is it the same thing?
Yes, option is this is the same but a little bit different. So with option, you don't really need leverage because option, you're not buying the. Let's say now I want to buy Tesla option. For Tesla option, I'm not buying the actual share. I'm buying a contract.
Okay.
So I'm just going to buy a contract. So basically, the price of the option Tesla price is still is what will still
437.
determine what my result will be, what my outcome will be. But I'm not doing solely based on the market price. I'm doing based on contract. So at that point, you'll be dealing with two prices. You have the market price, which is called
The
the
bid.
strike price, and then
Mm-hmm.
you have the contract price. So each contract is 100 units. And 100 units is going to be, they will have a set price for that separately, apart from the price of the current Tesla. So like option is something different. So because you have to understand some terminology too. They have their own old terms and everything. So you have to understand all that. And back to your first question. I get, like I said, it is a lot of information. It's not something that we can learn within 2 hours. It's something that we have to kind of like, really break down. So we'll see what we can do as we go. Pastor, like, reach out to Pastor. Pastor will let you know, and then we'll see what we can do going forward. And maybe like, probably put together a workshop that'll be more than like, this time that we have, so that we can actually take it from the bottom to the
Mm-hmm.
top or from the top to the bottom. So we can like learn to an extent that we can actually implement.
Sure, that's good. I'm interested. I'm gonna be the leader.
Yeah, connect with Pastor, and then Pastor will let you know.
All right.
Yeah.
Thank you.
You're welcome.
Thank you. It will be good to have one for beginners. Okay, somebody just said it will be good to have one for beginners. Yes. So Mr. Dayo mentioned that this is just to like bridge the gap between the beginners and those that are already in the game. So yes, I concur to that. We'll be looking into that as the future unfolds. And I'm sure Brother Dayo is always ready to give us from from his pool of knowledge. So we'll work together and see how we can do that. Like you said, it's not going to be a 2-hour thing. It's not going to be, but I know the problem some of us have in this part of the world is timing, timing. So, and if we want to break a circle, we should be ready to create some time, right? So we'll work on that. And we'll get back as soon as we can. Thank you so much.
Okay, one more question. If you don't have a green card, will you be able to do this type of business?
Yes, that's the good thing about it. You don't need green card. You don't need there's no location barrier, nothing. Provided you have your laptop and your internet, that's
And
it.
what about Social Security?
You
No.
don't need social security either, depending on the brokerage that you're trying to work with. Some of
Okay.
the brokerage, like the My Chat Pro, you don't need social security. You just go in there, create an account. They ask for your ID for verification, and then you have an account, and then you can start trading.
Okay, that's awesome. All right.
So I have a question too about that one. If you wanna open an account, like is there like an application or you just go to website and write wellbull.com, or is there like an app you can download and put it in your phone so you can monitor like everywhere you go, you're able to monitor your trades?
That's good. So that's a good question. So they have both app, like mobile app that you can use, and they have the desktop version of it. It doesn't matter. What you see on desktop, you can also see on the app that you can use on your phone.
Okay,
But for the application, go ahead.
is there like also an app to put the money, or you just go direct and you put your money? Because sometimes I used to trade before and we used to have like D-M-Pesa, E-M-Pesa to deposit and withdraw. So for this one is new. I don't know how to do it.
So it's the same. So once you go on the website or on the website Weibo, you create an account. It's just like you creating a Yahoo or Gmail account. Once you create the account, you go through the authentication process. Like, you have to upload your ID just to avoid scam, like people that will probably want to hack into your account. And speaking of that, people, please, if you're creating an account, make sure you have 2 steps verification set up. So like you create the account, you have your phone number in, and you have that set up as an authentication process. So if you are logging into your account, you always want to get a text message, a code from them to confirm that it's you before you access the account. Because you don't want to put up an account without 2-step verification, and other people will go there and hack into your account and steal your money. But if you have your 2-step verification, once you put your username and password, they will send you a text message. They'll send you a code via text message that you will put in before they authorize you they will give you access into the platform, which will be an additional step to protect yourself. I'm saying this because there are a lot of hackers, a lot of people that are out there stealing people's money. And the
Yeah.
people that don't have second step verification are the ones that are stealing their money. So, even if they steal your password, they still need to steal your phone before they can get into your wallet, into your account. So they can steal your password and steal your phone at the same time. Or the same person that steal your password, it will be very hard for one person to steal your password and steal your phone. So if that happened, then it must be somebody that that's really close to you. So just as a extra layer of protection, always remember to set up the 2-step authentication. And also back to your question. So what you do is a very simple process. You go on the website, you create an account, username and password. You create your second step 2-step authentication, and then there's a page on the website where you click deposit. When you click on deposit, they'll tell you how to deposit. Some of them, they'll let you do bank transfer. You can transfer money from your bank. You can deposit to your card, either your debit card or your credit card, or you can deposit through crypto, whichever one that works with you. But they will guide you on step by step on how to deposit, and also they have step by step on how to withdraw your money if it's time for you to withdraw.
Okay, thank you. And if I open that account, do they have like a demo account before I open a real account? So like for more training in case?
That's a very good question. Yes, they have a demo account. So you can create an account, use demo account to practice before you now open a live account for real trading.
Thank you.
You're welcome.
Okay, Timmy, I just wanted to add to that. So in most of these platforms, do you trade yourself or you can just give it to them for them to trade for you?
That's a good question. So that's a different platform. So there's a platform that is called Acorns, Acorns. You create an account, you deposit money, they trade for you. So this one, they won't tell you that, okay, like that's kind of like low risk. So you put $100, but they won't tell you, like, at what time you will make a certain amount of money. You just put $100, then you just see your account grow. Like, you can see $2, you can see $5, but there's no time frame to it. But if you really, really look at it, you might not make 100% of that your money in 5 years.
Wow.
$200, you might not make $200 in 5 years. But if you really learn it, you can turn your $100 to $200 within a short period of time. But if you are that person that's trying to be safe, you don't want to take risk or stuff like that, you can do that. But doing that, it's not doesn't mean that they won't risk. They will still risk the money, but they risk it in a way that it will make more sense for them. So because like based on what we went through now, if they risk the money, they use the $100, they take a couple of trades, they lose 4 second third trade, they won't pay you at that point. They won't report it to you that they lose money, but you won't know. After they now make profit, let's say they now make $200 profit, that's when they'll probably give you 1% or 10% of that money. It's as good as you putting your money in your bank.
Yep.
But the difference is they'll give you their own distance might be a little bit more, a little bit better than what the bank will give you, because the bank will only give you 0.1%. But they might give you maybe 1% or 1.5% or 2%. But if you really look at it, if you learn the skill, you have the skill, it's nowhere, like whatever they're offering you, it's nowhere close to what you will make in return for yourself. Because basically you're just giving your money to them to trade with, and they will still be the one to decide how much they want to give you as in return, compared to you using your own money to trade and make profit. So it's good to start with Acorns, ACR. I'm gonna put the site here too. You can use it to kind of like start, create an account. You can put some money there, and then they will kind of like trade for you and give you some profit.
Timmy, I've been hearing like on the news, I used to hear something like Fisher Investments. Are they like the same thing like Acorn?
What do you call it?
Fisher Investments. I used to see them on TV.
I haven't heard about that before. Is it trading? Is it for trading?
I don't know. I think that I think I guess they trade.
Because they have different like all these different companies. Even for real estate, we have REIT, R-E-I-T,
All right.
R-E-I-T. Like you just give them money, they will invest and then give you like a portion of the profit. It's not like you learning how to do real estate and do it yourself. The same thing applies to all these other platforms too. So yeah,
Okay.
you can do that. Just reach out, make sure they are legit, whatever they are into, and then we have this scam ones, all this what's it called? The one that happened in Africa recently. All those,
Business, is it business or something like that?
yeah, all those ones. So you have to be careful. But like Econs is very solid. They won't tell you what they will give you in return. They will tell you that they'll give you return based on
The
what they make in the
contribution.
market.
Mhm.
Or it's them using your money at a very high scale. Like you give them 1,000, they make 1,000 from 1,000. They won't give you 1,000. They probably give you $50, $20. But if you learn the skill yourself, you can do that while you're learning, so that at least you have an understanding how the market works. And as you learn, then when you're comfortable doing it yourself, then you can take out your money from there. At least it's better than having your money out, have your money sit in the bank and have them give you like 0.1%.
Absolutely.
So you keep it there. They're giving you something while you're learning. Then once you're comfortable, you can take out your money and put in your own trading account and make something solid out of it.
Thank you, Brother Dio. Because of our time, we have one question here. Can one use accounts with Fidelity or Schwab?
Yes, yes, those are actually very good ones. Those are like, they are more um more advanced, a little bit advanced than Weibo. So Schwab, Fidelity are very good ones too. And with Schwab, you can trade options. For people that are asking about options, Weibo you can trade options too. Schwab you can trade options, you can trade direct stocks and in Fidelity as well.
Thank you. Any more questions before we wrap this up? Any more questions? Okay, I will assume we are done with questions. This is just like we are opening the year with knowledge so that we can navigate the year in a great way, right? So we'll keep learning and build knowledge. It's all about that. So the more you know, the better you do. That's my slang, whatever we have right now, it's about the information that we have access to and that we have make use of, right? So we can take all this training and just go back and then start procrastinating and say, I'll do it later, I'll do it sometimes, I will do it. It will not get us anywhere until we put those into action. And in investments, invest either real estate or money market, it's all about risk taking. And we have seen that those people that are really making it here, they are risk takers. So don't let us be shy of taking risk or be afraid to take risk, because in risk, that's where we found wealth. So I want to encourage everyone tonight. I mean, we can do more research on this, how to start. I do leverage YouTube a lot for most part of my learnings. I use YouTube. You will see breakdown step by step. So for beginners, I mean, so you don't have to wait. Don't wait until we have the next one. Of course, we're going to have the next one. Start building something. Step out and step out bold. And I want to appreciate Brother Dio for your time. Thank you so much for coming online today and sharing with us from your pool of knowledge. We appreciate it and we say God bless you. For next week, we are coming back next Saturday, and it's going to be wow, because we are going to dive deep into real estate investing, which is one of the key investment strategy right now, because over the years, thousands of years, it's been proven that other investment strategy can fail, but real estate has really stand the test of time. And we can say that because every one of us, we are living in a house right now. Either it's rented, either we bought it, either we built it. We are in a house. So that is like a testimony that real estate is real. And in my business, my slang is there's nothing as real as real estate. If it's real, it's real estate. So next week we're going to dive deep into that and taking it from beginners level, step by step, how to invest to go into real estate without panicking, without having to wait for so many years and say until I put certain amount of money in my account, save for 5 years to buy a property, and after that I will buy another 5 years. No, real estate game has really gone beyond that. And that is what we will be sharing next week. It's going to be in person in our church. This is a program organized by the church. As the name of our church is Impart, our goal is to continue to impart our word. No, church has really gone beyond us gathering and clapping our hands and praising God. It's about adding value. And when we add value, the people becomes better. They are able to serve God in a better way, right? So if everyone here, if we are in a state where we are financially free, it will not be a problem to sponsor kingdom assignment. It will not be a problem to help other people on the street, So that is our mindset in this church. We are all about impart. So next week is going to be in person in our church in Washington, PA, right in the city of Washington. If you are local, if you are in Pittsburgh area, you're local, I don't see any reason why you don't want to come in, because we'll be sharing some resources that we cannot share online. But if you're out of the state, you are far away from here, from this location. You can join online on our church website. I'm going to drop that link. Please save the link. Where we'll be streaming. It's not going to be on Zoom because we cannot rely on Zoom for next week based on performance of network and all of that. But we have our streaming platform on YouTube. I'm going to share that link right now. Make sure you copy the link and save it. If you are not going to be in person, make sure you save that link. Come there and watch live. We're going to start 10:30. It's going to be more informative. It's going to be practical. It's going to be hands-on. So I want you to come in with expectation that as you coming in, you will not go back the same. It's always like that. So come in with a mindset of possibility because it's all about possibility. The Bible says, I believe everyone here is a Christian, and if you're not, the Bible says with God, all things are possible. That means God is who make everything work. So without God, whatever we learn, whatever we try to do on our own effort, we may keep trying, but we may be struggle. But with God on our side, it makes it so beautiful. So next week is going to be another great time. Today, I enjoyed it. I mean, I love investment. I love to learn, and I love to accumulate knowledge because knowledge is power. Knowledge is power. So next week, connect with us and you can share this link. You can invite. So if you are married, again, I want to say, when you're coming to a training like this, don't come alone with yourself, come with your spouse because it takes two to tango. One can walk alone, you can move fast, but when you are working together, you can move faster. So I would encourage everyone, if you're married, make sure you connect or you come in person with your wife, with your husband, so that we can work together. In real estate investing, it is much more practical. We have seen that for people to soar higher so fast if they are working together, if husband and wife collaborate together, other than one person. You have seen success in individuals, but there's more success when we work together as a team in family. So next week is going to be great, and I look forward to seeing every one of you and more people that will be coming. If you have any questions about how to access us, please feel free to connect with me on this phone number. I'm going to send 862-766-7994. My name is Mary, Pastor Mary from ACC Impact House. We are located in the city of Washington in Pennsylvania. God bless every one of us tonight. Thank you. Thank you for coming online, from learning with us, and we want to see you be part of this family. Every time we have something like this going on, we want you to be part of that. We want to invite you, either you're local, you are out of the state. It is not a barrier right now. So we pray that God bless you. And if you're in the city at any point in time, maybe you came for vacation, do good to visit us and worship with us. God bless you. If you also have members of your family, people around you that are local, please help us tell them about our church. God is doing wonderful things in our midst, and we want to celebrate His glory. Thank you so much, everyone. We're going to wrap it up at this point. The number again, so I'm sending the number, sorry. So I just sent my number, 862-766-7994, 862-766-7994. My name is Mary Adesanya. God bless everyone. Let's have a blessed and blessed evening. Noon, sorry. I don't know why I keep saying in the evening. God bless everyone. Thank you so much. God bless.
What's your phone number again? Sorry, I missed
I just sent it in the chat. 862. It's okay. I'm going to say it. 862-766-7994. 862-766-7994. Yeah. If you test, you can test. Test is the best way to reach me. Please, so that I will not miss your call. Okay. Thank you so much. God bless everyone. We look forward to seeing you next week. God bless. Thank you, Brother Dio.
Thank you.
So much. God bless you.
Thank you,
Thank
Mom.
you.
Thank you so much, Uncle Dios. Thank you, Pastor Mary.
Thank you, ma'am.
That didn't give us his number.
He left already. Come to our church and you get his number.
That's it.
Okay.